SBUX Stock, ticker symbol SBUX. Today, Starbucks presented quarter results where they beat on EPS and revenue. The stock went up a whopping 10% after these earnings. Year to date, the stock is nearly flat, which is kinda interesting. People love Starbucks stocks because of multiple reasons, and one of them being the dividend. And I understand why, with dividend yield at 2.5% and 12 years of dividend growth. So could this be the perfect moment to buy SBUX stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Starbucks do? Starbucks is one of the most widely recognized restaurant brands in the world, operating more than 38,000 stores across more than 80 countries. Starbucks operates in three segments: North America, international markets, and channel development, such as grocery and ready-to-drink beverage. If we check the earnings report, we see that revenue was reported at $9.4 billion, up 11% year over year. Comparable sales was up 8% globally. EPS was reported at $1.06. Global store count was reported a little over 38,000 stores. The US Starbucks Reward memberships reaches 32.6 million, up 14% year over year. What I think is very interesting is the fact that comparable store sales increased 8%, driven by a 4% increase in average ticket and 3% increase in comparable transactions. To me, this looks really good. You can easily get more revenue by opening a new store, but you want the existing stores to grow as well. North America and US comparable store sales increased 8%, driven by a 6% increase in average ticket. International comparable sales increased 5%, also driven by a 6% increase in transaction, but a 1% decline in average ticket. China comparable sales increased 5%, driven by a 8% increase in transactions, but a 3% decline in average ticket. Another interesting thing is that operating margin was reported at 18.2%, up from 14.2% last year, primarily driven by in-store operational efficiencies, still leverage and pricing. And here we see the results for North America segment. Comparable sales is slowing down a little bit, but is still looking really good, especially the operating income and margin is looking really good here. In here we see the numbers for the international segment. Last year comparable sales was reported at -5%. Right now it is reported at 5%, so this is looking really good. And again, if we look at the margins, it is looking pretty impressive. The last segment, channel development, is also doing pretty good in terms of margins, a big increase there. However, the revenue is flat year over year. When we check the detailed version of China results, we see that revenue is up 8%, while change in comparable sales is up 5%, versus -16% last year. Transactions is also looking really good. However, change in ticket is decreasing 3%, which is very interesting. And now that we know a little bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Starbucks is a 116 billion market cap company. PE ratio is at almost 30, which could indicate that they are overvalued right now. Later in this video I will show you my 3 price targets for Starbucks stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 35 billion, and in this graph we see that revenue went up in the long run. During the lockdown period revenue went down a bit, which makes sense of course. The same event is also reflected in the margins. It is going up and down quite a lot, and most recently margins are increasing again. And with China performing again on a decent level, it might increase even more. EPS is following the same pattern as the margins and revenue, nothing really special to add here. Analysts expect that from here the EPS will grow at pretty high numbers, from 13% up to 20%, so to me this looks really good. For the revenue it is a pretty similar story, but with lower numbers. It is expected to slow down a bit over the years, which also makes sense, but still looking really good to me. Return on assets is sitting at 14.6%, which is a great number. Return on equity looks quite interesting, but the most important number, return on invested capital, is sitting at 67%, which is a great number. And it is also higher versus the 5-year average, which is very nice. Current ratio is at 0.78, which is looking pretty good. There is nothing really special to mention here. Right now Starbucks has 24 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Starbucks has roughly 3.6 billion in total cash. So they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up, but not really steady and consistent. Again, we see the impact of lockdown periods, but overall it looks good to me. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.5%, which is a great number. Annual payout is at $2.28 and payout ratio is at 64%. I prefer 50% or lower, so right now they have 36% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 11%, which is a great number, and they have 12 consecutive years of dividend increases. And if you take a look at these numbers, the dividends paid since 2012, you see that Starbucks did increase the dividends at double digit for a long time. But as of lately, the dividend growth is slowing down a bit. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that over a longer period of time, payout ratio is steady at roughly 60%. I prefer 50% or lower. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at similar growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare SBUX stock with the overall market. In this case the S&P 500. Next to that I added Yum Brands and QSR. On the 5-year chart we see that Starbucks did beat the S&P 500 by a small amount. In total, Starbucks returned 73% including dividends, versus the S&P 500 sitting at 68%. Both other stocks have a lower return. On the 1-year chart we see that the S&P 500 did beat Starbucks and Yum Brands by a decent amount. QSR is having the highest return here. On the 6-month chart it is looking pretty different, with again the S&P 500 having the highest return and with all the other having a negative return. On the 1-month chart it is again Starbucks that is having the highest return, also because of today's events. In total Starbucks returned 11%. So bottom line, Starbucks beats the S&P 500 in others in both long and short run. So could this be the perfect time to buy SBUX stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8, 9 and 10%. based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 11, 12 and 13%, and for the free cash flow margin I'm putting in the same numbers. For the PE ratio and the price to free cash flow I'm putting in 20, 22.5 and 25. They are capable of growing at a high pace for their size, and in my opinion Starbucks has a strong moat in different areas. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now Starbucks stock is sitting at $101. I hit analyze and we only see a few green numbers. We have a low price target of $69, we have a mid price target of $88 and we have a high price target of $110. To me the high price target is the most justified here, indicating that this stock is undervalued right now, but not by much. My final conclusion on this stock is that I love the company. Today's results were great and exactly what the company needed. However, the stock doesn't feel massively undervalued. Most fundamentals look really good and the company has a strong moat in my opinion. Dividends are great, but I would prefer a lower payout ratio to be honest. For now I'm waiting for a correction in stock price. When it was around $90 I think you had a great deal. Now sitting at $101 it does feel like there could be better deals in the market or by waiting for Starbucks to come down again. So I keep analyzing this stock from time to time, but I definitely feel great about today's earnings report. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you did like this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.